Hi everyone, wishing you a very happy Chinese New Year. Okay, for today we're going to be covering a very interesting topic. We're going to be covering the topic of Bitcoin. Okay, now, first of all, the world of cryptocurrency is extremely complicated. Okay, and even for myself, right, I probably know maybe only 1% of what actually goes on in the entire crypto universe. Okay, but what I do acknowledge is that crypto is something that, depending on momentum, has the potentially to significantly increase your investment in a very, very short period of time. Okay, and or rather, that's a very nice way to sugarcoat a word called greed, lah. Okay, but greed is fine. Greed is a very, very normal human thing. If you're not greedy, then I mean, you're probably not human. But I guess the important question here is how exactly do we manage greed? Okay, and there's many, many ways to do it. And in my opinion, when it comes to crypto, the first way that I manage my crypto portfolio is that I always believe that crypto should always be a single digit percentage in your portfolio. Okay, now people kind of differ this from time to time. They say, oh, crypto should be 3%, 1%, 5%. Okay, but in my opinion, if you have a small portfolio, like me, small portfolio, you can kind of like maybe go like, 7, 8% of crypto and maybe not more than that. Okay, but really what we have to do here is that when I say I invest in crypto, I definitely do, but I do it knowing that if it goes down, I only lose less than 10% of my portfolio, and I'm perfectly comfortable with that. Okay, so when you say that you invest in crypto, but 100% of your portfolio is in crypto, then you need to be very, very careful because it either go up or down either way. All right. So with that, let's take a look at Bitcoin. Okay, crypto has been very, very tricky lately. Okay, a lot of nonsense has happened. You have like Do Kwon with the Luna crash. You see tons of like people losing their money. And right now I don't know whether it's still on the run or captured or whatever, but that's messed up. After the Luna crash, it exposed so much more cracks to the industry. Everybody is still like, even in recessionary conditions, still on freaking leverage. Okay, and now because of that, you see other exchanges going down. You see Gemini going down. You see thoughts of even the biggest exchanges halting withdrawals like crypto.com. When crypto.com did their little hot withdrawal nonsense, I was scared. I pulled out everything from crypto.com. I have $0 left in crypto.com. Now, even though CRO went up, CRO is the native token of crypto.com. It kind of, I guess, indicates the health of crypto.com in that sense. Okay, crypto.com recovered, but no, I'm staying away from crypto.com. Okay, and next, what was that? Binance doing well, a lot of withdrawals, but you can see that they maybe have a little bit of pauses, very minor ones, but you can still get money from Binance. Binance is still handling the withdrawals well. We know one that didn't end up very well, and that's our dear FTX, Sam Bankman-Fried. Credits to our good old sovereign fund. Okay, I don't want to comment on that further. Okay, but I'm not going to comment on that further. Very, very touchy. Yeah. Okay, but as we know, FTX went down. With that, a lot of people's money went down. You still have people, like Kevin O'Leary saying that, yeah, it's going to be fine, all this kind of crap. Okay, by the end of the day, it went down. Okay, so very, very difficult time for crypto. Okay, when the exchanges start to go down, you know that the industry is on a very, very severe decline. Okay, but recently, okay, Bitcoin, not recently, a quarter ago, broke this so-called key support level of 20K. And right now, as of a few days ago, it broke this key resistance level of 20K. Okay, there's a few reasons why this happened. Okay, I'm going to go into a total of 4 reasons. Okay, with the first being what we call these profits lah. Okay, so this kind of crypto industry, always got a few people very famous one now. Okay, they like to say shit and then they like to say some stuff and then it comes true. But then again, the clock is right twice a day, right? All right. But anyway, this person, okay, who goes by the this name called a smart contractor. Okay, basically he has like almost 300K followers on his Twitter account. What he says is like apparently like words from the Bible. Okay, and he said that with this so-called breaking of this key resistance level of 20K, that this is the bottom. Okay, and he called the bottom correctly in 2018, and now he's calling it the bottom now. So that's one so-called bullish indicator. Another one is, of course, if we look at macroeconomic conditions, okay, we can see that even with the latest CPI report, inflation came in, if I'm not wrong, as predicted, or 0.1% less than what was predicted, but it was pretty much in line with what economists predicted. So overall, the general sentiment, all right, is that people believe that, okay, we're past that tipping point of inflation. We believe that it's not going to continue going up. Hence, I guess you have what you call a suckers rally. Okay, I'll go into that a little bit more later. Okay, and next we have a other analysts at this Japanese crypto exchange called Bitbank, and he's pretty much very optimistic about market conditions. He says that there is a brewing hope among market participants that the Fed will further slow down on the pace of rate hikes. Okay, so all these kind of just in general, I would say that sentiment hasn't exactly changed, but at the very least sentiment has changed enough for people to kind of go like, okay lah, put a little bit inside at this point, how much lower can it go? You have that kind of like, okay lah, I already went low enough, now like a bit of hope, let's just give it a try. Okay, and this is where we have this concept of a suckers rally. People's gonna be like, hey, this thing is short-lived lah, won't happen one. And no one really knows whether it is a suckers rally or not, but what we do know is that if you all see that little chart of like optimism, then depression, suckers rally, that little chart, you can see that right at the bottom or close to the bottom, everything starts with this concept of a suckers rally. Okay, and to sum up the last point on why we are seeing a little bit of a turnover in sentiment, is that as of 2 days ago, there is a Bitcoin fear and greed index. Okay, and as of 15th of January, the index turned from like fear or extreme fear to neutral. Okay, so people feel like sigh of relief. Okay, and with this neutral, the last time that we hit these neutral levels was about last year. I think last year in April. Yeah, 2022 April. So right now we are in what we call neutral territory, or at least that's the sentiment of the market. It's not super optimistic, but at current levels, I think people are starting to feel like, okay, enough damage has been done. Let's try and put in a bit to see if we can, get things while it's still cheap. Okay. Next, of course, in general, if you ask me, did something really, really big happen to cause this so-called little bull rally? Did like, I don't know, did Warren Buffett suddenly decide to convert all of his Coke shares into Bitcoin? No, that didn't happen. Okay, so these are still just very, very minor things, nothing really like significant, I mean, I don't know, like something significant would be something like yeah, like Warren Buffett, that kind of thing, and that hasn't happened. Okay, in fact, from to my latest understanding, exchanges are still going down. They are still in the red. So overall, I mean, yeah, okay, it's good to nibble, take a little bit, but nothing really all in. Okay, but that's enough of the so-called looking at fundamentals and economics. Let's take a look at the charts. Okay, that's always my favorite part. All right, and now let's take a look at the charts over here. Now the Bitcoin chart is very, very interesting. Okay, we go down to the minute detail. There's a lot for me to talk about. Okay, but considering that we have all kinds of viewers here, I'm just gonna go really, really borderline. Okay, then I'll go really, really deep. Okay, now at the very onset, right? Okay, look at the green color line. This floating, this lime green line. Okay, this lime green line. Okay, is what we call the 200-day moving average. Okay, whenever we see the price action break out of this 200-day moving average, even if you look at it in isolation, okay, so let's just take away this blue line for now. So whenever we see price break above this 200-day moving average, which was what happened back during our initial phase of lockdown, remember Q1 of 2020, yeah, cannot go out of the house, those fun days. We see that price action here broke above, and then that started our beautiful rally from 10K all the way to 60K. Okay, and then after that we can see a little bit of what we call consolidation here, and we can see that once this key area over here, right, somewhere in April, where we were unable to beat to break above this 200-day average, then that was like basically just a hell for all of us lah. Okay, and we can see right now where we are at. Okay, just gonna zoom in really closely so that everybody can see this. As of now, we have once again broke past, okay, this 200-day moving average. Okay, and bear in mind what I said. Okay, the last time we broke past this level, okay, even like even somewhere here, okay, that sparked the rally. No doubt about that. Okay, so of course with this indicator, right, we are saying that there's a lot of renewed optimism in the market. But if this is not enough, okay, let me just bring back the 50-day moving average. Okay, so that's the blue line over here. Now the 50-day moving average at a point where it crosses at the point where the 50-day moving average cross the 200-day moving average, this is what we know as a goal what is it, a goal cross or goal star or whatever lah. Okay, but basically to put it really simple, blue line beat the green line is a good thing. Okay, and we can see that as much as we have all this optimism now, right? Okay, this 50-day moving average blue line, it hasn't quite broken past the 200-day moving average. Okay, so because of that, people are still waiting. Okay, but in my opinion, if I were looking, and I am looking for a confirmed signal, okay, I will wait. Okay, for this eventual what we call a go cross, a go star, whatever, to form. Okay, interesting to note about this diagram as well, right? Okay, is that if you look at the indicator at the bottom here, right, this area called RSI, you can see that right now, okay, we are at severely overbought territory. Okay, and what this indicates, right, okay, is that the rally right now, okay, is a little bit overstretched. Okay, it indicates that there's a very high chance that this rally will cool off in the near future. Okay, and in my opinion, okay, what will happen very likely in this scenario, okay, I'll not say very likely lah, but just based on my experience, okay, is that it is very likely we will have what we call a cup and handle pattern. Okay, so what a cup and handle pattern basically is, right, okay, is that right now you see the stock has sorry, not the stock, Bitcoin has reached this key 22k level, and it is very likely that those people that bought in this 15-16 range, they will want to take profit. I mean, 25%, not too bad, right? Okay, so when they start to take profit, the stock, the crypto will kind of retract down a little. Okay, and with this, it is likely we'll see Bitcoin form what is called a handle. Okay, it will retract to maybe, I don't know, a good psychological support, maybe 1750-ish. Yep, 1715. And from there, okay, if everything is, of course, well and good, then we will see the rally go something like this. Possibly. Okay, this is of course just my speculation. Okay, but time and time again in history, this kind of what we call price action chart patterns, they kind of held their worth throughout history. So it is very likely, given that rally is overstretched, that people will want to take profit, we would see a small move to the downside. And actually, you know what? Speaking of the downside, if you look at this 200-day moving average, it would be great if this downside, right, was kind of limited to like I don't know, maybe something like this. So maybe it goes down to here, something like that. Yeah, and then we go up. So this would mean, right, effectively that the 200-day moving average is now the support line for Bitcoin. Correct. There's a name for this. I think it's a linear support level, structural support. Okay, whatever. Okay, but there's a word for that. Okay, but basically, if this 200-day moving average becomes the support, I would say that there may be a chance that this rally is not a suckers rally. Okay, but once again, we need to bear in mind that whether this is a suckers rally or not, okay, we should once again make sure that we control our risk lah. Okay, that one very important. We still don't know, if more exchanges are going to go down. We don't know what's going to happen. Okay, and of course, what we do know for certain is that in a 0% interest rate environment, crypto is always a bull market. Okay, so with that, come to the end of this video. Okay, the only thing I can say to sum up is always manage your risk. Okay, I advocate crypto, but that's because I have a single percentage holdings of it. If I own 100% of crypto, which I don't know, but I still wouldn't be advocating that. But still, control your risk. Have a great CNY, and hope you all will whack this year of the rabbit. Thanks, guys.